What's going on, guys? Another options crash course for you guys, and that's because there seems to be a lot of confusion on what strike and expiry you guys should choose. So once we get through this PowerPoint, at the end we're going to use Unusual Whale's flow and team that up with a chart, and that way we can decide which strike and expiry to choose to maximize our profits for that day. Alright guys, so without further ado, let's get right into it. So what strike and expiry should you choose? Choosing the correct strike or expiry depends on your outlook. Are you day trading or are you swing trading? These are the two major things you guys need to ask yourself before you decide on what strike or expiry you guys are going to choose. Now, if you're day trading, what expiry do you choose? For day trading, my general rule of thumb is on Monday to Wednesdays, I choose the same week expiry. That's because the theta is not high enough or significant enough to kill my play, even if the trade takes about 15 minutes or an hour to take effect. On Thursdays, I choose next week's expiry. That's because if I hold my Thursday trade going into the next day, and if I have same week expiries, that theta, which we talked about in the prior course, is going to affect my premium greatly. So on Thursdays, because there's not enough time that week, I want to choose next week's expiry. On Fridays, you have two options. You can choose the lotto, which we talked about in the old crash course, or you can choose next week's expiry. On Fridays, personally, I always use lotto, which is a higher risk, higher reward trade. However, with that means I have to put in a smaller dollar amount, because if it goes to zero, I have to be okay with losing that money that I invested. Now, if you're day trading, what strike do you choose? To choose a strike, you need to look at delta. On delta, what we're looking for is a 0.45 to a 0.55. This means the options contract will move up about 45 cents to 55 cents per dollar move of the underlying stock. Usually the one that's in the money and the one that's out of money is the best choice in regards to this. Here's an example of an options chain on Nvidia for November 26th. What we're looking at here, these two strikes are the best. Why? Because we have that 0.44 and 0.56, which falls in the criteria, and these are going to be the best for day trading. Remember, same week expiry, Monday to Wednesday, next week expiry on Thursday, and lottos on Friday. Now, if you're swing trading, what expiry do you choose then? Well, with swing trading, what we're really fighting here is time, and time equals theta. We need time in order for the trade to work. When we're swing trading, we're looking at patterns on the daily, on the weekly, and therefore the time that we need is going to really affect which expiry we choose. You need to find an expiry with low theta and high delta. This ratio is very important if you're looking to swing trade and hold positions for a few days to weeks. All right, so here's an example that's actually pretty awful if you're looking to swing trade, meaning you're going to hold this position for a few days to a few weeks. If you choose the same week, right? If you choose even sometimes the next week, look at your delta to theta ratio. You have a delta of 0.44 and you have a theta of 0.59, meaning if the stock moves up $1 by the next day, you're already chewing away at your delta premium and you're back down in the red. So this is very important if you guys are looking to hold positions for a few days to a few weeks. Here's a good example. You see that we've gone further out into January now, but look at our delta to theta. We have a delta of 0.52 and we have a theta of 0.19. This tells us that every dollar the stock moves, we're going to gain 52 cents, and every day going forward, we're going to lose only 19 cents. So the delta overpowers the theta in this choice, and we have lots of time for the stock to play itself out in order to achieve our targets. Now, let's say we've decided what we're going to choose. Whether we're day trading or swing trading, we need to understand how to actually buy the options. And this right here is obviously the TD platform, but most brokers have the exact same layout. You have the expiry, the strike, the calls are on the left side, the puts are on the right side, and in order for you to get into the trade, you have to click on the ask. Once you click on the ask, oftentimes the order window pops up. Once the order window pops up, you want to ensure a few things. You want to make sure you're buying the call and not selling. You have to ensure that. You have to choose how many contracts you want. Sometimes some brokers have a preset amount, so without you wanting, maybe there'll be 10 contracts in there, and really you could only afford to buy one contract. Then you have to choose and make sure that you have the right stock, the right expiry, and the right strike. And again, double check that you're actually buying a call. Now on this side, this is where your order comes in. A lot of people have a hard time with putting in limit orders in case the bid and ask is a little too wide. You have to understand where the bid and ask is. That way you can establish where you want to put your limit order. If you put your limit order right at the ask, you're going to get filled almost instantly. Now, if the spread is a lot tighter, let's say that bid was 10 and the ask is 10.15, you can very easily use market to get in a lot quicker. Now, because the spread is a little wider, you're going to have to find a fine line or a good balance between the two in order for you to get filled on your contract. Now, bids and ask on level 2 is a whole nother video that we'll talk about down the road. Now, once all this is checked, you press confirm and send. This was a very quick runaround on which strike expiries you guys should choose, whether you're day trading or swing trading. Now let's use a live example on NVIDIA and how you guys can use unusual whales to choose the proper strike or expiry. So I made a video on NVIDIA yesterday, however, I'm going to use NVIDIA as an example again. Here, this is the 2-minute chart. We can see that once we really got back above this 323, volume started to come in. And here we have increasing volume going through an area of resistance, which confirms the move. However, you don't want to chase this move up because it can very easily pull back down. So what do? We have to wait for a pattern. And as we're waiting for a pattern, we have this falling wedge. As you can see, the falling wedge is a move up and a consolidative pullback into a wedge. And then once that wedge breaks out, we really take off, and that's exactly what we have here. This push up, this consolidation into a wedge, and now you can see that we've come back into an area of support, which is 323, into the 200 moving average, which I use often for my day trading charts. And once we broke out, volume came back in to confirm the breakout, and we really took off, and your first targets are right here. Now, to really understand and give you confirmation to take this trade, you have a few things going for you here. You have the breakout with volume, which is 1. You have the pullback into support, which is 2. You have the 200 moving average acting as support as well, 3. And also, right around this pullback, if you were paying attention to the flow was pouring in with short-term expiries, 1126, 1119, 1203, 1119, all out of the money calls. They were pouring in right at around 11, 1130, and right up until the breakout here at 1140, right? If you're paying attention to the flow and you're seeing this pull back in, you're able to now say, okay, I want to take this option trade. Now, you don't have to choose the exact same expiry that you see here. You don't have to choose the exact same strike that you see here. What you need to do is instantly pull up the options chain. Once you pull up the options chain, you're going to want to ask yourself again, is this a day trade or is this something you want to hold for a few days? If today is Monday and I want to day trade this based on the flow that's coming in on short-term expiries, I'm looking to buy the same week expiry. All right, so let's say today is Monday. We're going to choose the November 26th expiry, and what we're looking for here again, guys, is that 0.44 to the 0.55 delta. This 335 and the 330 are right down our alley. Now, what I also like to look at is how realistic are we going to be in order to hit that target. So realistically, if I'm looking to buy these two, strike is 330 and the other one is 335. If we're sitting at 323, the chances of me hitting 330 is probably a lot likely than me hitting 335. So that's also something I take into consideration, and I'm going to choose the 330 and use that as a day trade. We saw the flow come in with short-term expiries. They're all out of the money. We have an explosive move out of the resistance level, which confirms the move, a pullback to retest that level, which also has a 200 moving average on the intraday as support. We have a daily support at 323. We have the flow to confirm it, and I'm looking at day trade, so I'm going to choose the same week expiry. Come here, open the options chain, make sure I choose a delta that is between 0.45 to 0.55, and understand that how likely are we to hit those strikes. Then I can decide which option chain I'm going to buy. I'm going to simply click it. It's going to come up. I'm going to make sure it's a buy, adjust the contract, double check the expiry, the strike, and make sure the limit order is set correctly based on the bid and ask, and press confirm and send. And I will be in that order, going to ride this move right up and take profits as it's moving into a prior area of resistance. All right, guys, so I hope you found this video helpful. This really briefly talked about what strike, what expiry, and also how to buy orders on options. If you enjoyed this content, make sure you guys like and retweet this tweet so we can get this out there to everyone so they can all see it, and I would greatly appreciate it. Again, thank you guys all for watching, and we'll catch you on the next Crash Course.